This segment is all about exit planning. Welcome to the program. I'm Mark Imperial, and this segment's brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books published to educate consumers, lead their field, and to leave a legacy. Joining me on this segment is Joseph Frasko. He's the founder of Aurora Capital Group. Joseph, welcome to the program.
Welcome. Thank you for having me.
Tell us a little bit about your work and specifically who are the types of clients that you help?
Sure. So we are a business value growth consultant. We work typically with companies that are approaching exit, looking for some form of transition, whether it's within the company or selling it to a third party. And typically, they're looking at a 2 to 3 year timeline before they're looking to exit from their company. The vast majority of the companies are usually doing between, I would say, 10 to $50 million a year in revenue, US based. And they're really looking to prepare themselves and get ready for that transition, which is uh, typically a more complex process.
For businesses that size, I'd imagine they're a little bit more experienced in the process. What does it look like? Do they know where to start when it comes to planning for exit?
So I would say most business owners usually built their company from scratch, and what ends up happening is they start off as an entrepreneur and they end up becoming a business owner. And in that transition process, there are a lot of elements within the business itself and the growth of the business that you're really not educated or trained or taught in school. Not only in, it's certainly not in lower education, but often even in higher education, you're not really trained on how to convert from being an employee or a business owner that has a job to a business owner where you're essentially detached from that company. And that process is really necessary to go through when you decide you want to transition out of the business.
So, for these business owners that don't have that kind of experience yet, what kind of preconceived notions do they hold? Are there any myths or misconceptions that they learn out there? What do you hear?
Sure. So often people think that the value of their business is just based on a multiple. They really don't understand how value of a company is made. Often, and typically, some of the statistics that are brought across, which are very common, 80 to 85% of business can't even sell or never get sold. And the ones that are sold often are sold at a discount because business owners don't really understand how the valuation process works. And they see it from the side of the business owner and how much effort they put into the business, not necessarily from the perspective of the buyer who's looking at it as a financial transaction.
Let's unpack that a little bit. As you mentioned, that's a pretty high number of businesses that can go unsold. Can you kind of give us like what are the big factors that might prevent a business from being sellable, and what are the mistakes that these business owners are making or lacking in?
Sure, it's very simple actually. The value of a company is based on two components: the quality of the company, as well as the amount of cash it produces. Unfortunately, most people don't realize that 80% of the value of a company is tied to its qualitative components. What does that mean? How are the operations? What's the consistency of the cash flow? Do the customers like the company? Does it have a brand name? How tied is the company to any one specific employee or to any one specific customer? So all these qualitative issues of the company drive the real value of the company because the owner wants to know how easy is it going to be for me to plug and play. Now, there's, I'm going to buy this company and I'm going to step into it. How much work am I going to have to do in order to continue the existing cash flow, the existing operations of the business, and or be able to grow that business?
Great insight. Joseph, what inspired you to get into this field? Like, how did you get started in helping business owners with their exit?
Well, for better or for worse, I am a serial entrepreneur, and I started from the bottom and went through a bunch of companies. Some of them I started myself, some of them I stepped into as executive management, and some of them I actually purchased. And what I ended up finding out was that most of the educational side that we have really doesn't prepare us for being a business owner. Most business owners, I tend to say, we're pretty myopic. So those of us who are maybe have a financial background, are really good at finance, but really terrible at sales and marketing, and so on and so forth. You can extrapolate in various areas of the company. And what ended up happening was I found that there had to be a system or a recipe in order to be able to make things work. When I finally figured that recipe out, and thankfully I did have a successful exit in 2017, my last exit in 2017, What ended up happening was I had a lot of people approach me to try and get an explanation. How did I do what I did? And that really became what I call a format of explanation on what the process is, what the recipe is to build the value in your company and to really prepare it for an exit. Most people think that exit strategies are really only there if you're going to sell your company imminently. But the best way of putting it is that exit strategies are really good business strategy. The things that you need to prepare a company for an exit are also the things that make a company successful as an ongoing operation.
Terrific. Before I ask you my last question, in regards to exit planning, is there anything that I didn't think to ask you that you feel is important to share with business owners today?
The only thing I would really say is, in terms of what are the expectations for exit planning, and exit planning, like anything else, is a recipe. It's a process. There are steps that you have to go through. You really have to understand what your needs are, where you're at, what's the baseline, what are you looking to accomplish, and then kind of figure out a plan in between. And there's typically elements that are involved in that process. The most important thing, I think, is just to understand that it really takes time if you want to do it properly. Certainly, if you're short on time, you can prioritize, but really to capture the fact that nobody really knows when they're going to exit, but everyone eventually does exit their company. And to the extent that you can step up ahead of the process and do some of the prep work in advance, that's always something that makes a lot of sense for you now, running the business as an ongoing entity, as well as when you do decide to exit.
For business owners listening who would love to speak with you and perhaps work with you, how can they find you and connect?
Sure. So they can go to our website, auroracapitalgroup.org, Aurora, capitalgroup.org. They can either start off with taking one of our assessments, or they can reach out and book a call. We'll be happy to have a no obligation conversation with them.
Joseph, this has been terrific. I really appreciate you taking the time to share with my audience today, and I wish you continued success for you and for all of your clients.
Thank you. See you as well. Have a great day.
That was Joseph Frasko, the founder of Aurora Capital Group. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books published to lead their field, educate consumers, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.